Guys, you know what's interesting? When you want to sell something, then in most of the cases, people want to bring your price down, they want to bargain, they want some kind of a discount. And then at the end, you just go with that price, you lower your price, and that's it. But isn't it funny that those same people, when they go to the grocery store, they, let's say, buy 5 boxes of cookies, and then when they get to the cash register, they pay the price as it is, they don't bargain, they don't ask for a discount, they just shut up and pay. So that's interesting. What I have learned is if you want to sell something and you want to get the price that you want, you should maybe put it in a box of cookies and put it on the shelf and name a price. Maybe then you will get your money. Hello guys. Today we're gonna talk a little bit about trading, about markets. So people, they were trading from the dawn of time, from forever. So basically they were swapping goods amongst them, swapping beans for meat, meat for leather, and so on. So every day in your life, basically, it's a trading occasion. So you always have to trade your time for some action or some good for another good. And that is what it's all about. What you need to know is how to get a fair price of what you want. Just don't overpay it, and that you get your money for what you are selling from others. But before that, before we dive more into the markets, first of all, I have seen that 95% of you who are watching this channel, who are supporting this channel by viewing it, are also not subscribed to it. So if it's possible, guys, please share, like, and particularly subscribe to my channel, because you will help me, you will help the algorithm to push my content even more to the people, and it will help me to prepare even more of this kind of content in the future, and everyone will benefit from it. So if it's not too big of a problem, go down to the link, in this link of YouTube, my channel, and then press subscribe or share or like, whatever you want, just to make and to keep this show rolling on. And basically that's it. Also, what I want to say move your attention to is that if you go to my web page, my YouTube page, you will see here that I have several links that are presented to you in the headers. So when you go here, you will see that there are different links. Basically, those are my affiliate links from the systems that I am supporting, where you can benefit if you decide to go with those systems and those solutions also. So you have here different links for, let's say, you have here a Tangent wallet. That's basically a hard, cold wallet for your crypto. And if you use my link, then you will get a discount. You have a 10% discount of buying this hardware wallet. It's a self-custodial wallet, and I personally am using Tangent, and it's great, it's good. It keeps all my crypto in one place, secure. It has a nice interface. So if you want, you can go and check it out. Also, what you have here is my personal Bybit account. When you go there, so this is the Bybit account. When you go there, you will see that you can get up to $6,000 of initial deposit bonuses because you have registered yourself with the Bybit platform using my personal account, my personal link. And then also you have a link to the stake investment application. It's basically a mobile application that you can install on your mobile phone, and it provides the possibility to stake into different kinds of real estate and to put money into different kinds of real estate in the region of United Arab Emirates or Saudi Arabia. And if you go with my link, then you can get up to 200 dirhams of, let's say, deposit bonuses on top of what you're already investing. It's around 50 euro. So why not? If you are, so just to make things clear, I'm not saying you should do it, that you have to do it, but if you want to invest your money, and I said you should always, when you get your income, you should pay your expenses, and then after that you should invest in yourself first. You should first pay yourself, and by paying yourself, I mean you have to invest your money. And one of the possibilities to invest in real estate, and that's why if you go with these kinds of applications like Stake, then you can claim up to 200 dirham of initial deposit bonuses. So why not if it's free? Why not? And also you have this link on my page to the eToro application that you can use for trading different kinds of stocks, ETFs, crypto, and so on. It's a very nice and user-friendly interface. And at the end, also you have the possibility to enroll with the Game Changer community, where you have different kinds of, let's say, life-worthy suggestions, lessons that you can learn how to improve your life, how to improve your skills, how to improve your trading abilities, and so on. Just to, as I said, to escape these ordinary things and to become a greater person each day. So let's see what are the markets and what about them. So let's continue. Let's talk about trading. Let's talk about the markets and how the price is set. What is the price and how to come to an agreement on how much to pay for something. So, as I said, from early dawn of our civilizations, everything is about trading. So you have something that you do and you provide some kind of a service or a good, and then you want to swap or interchange it with someone else that has something else that you want. You maybe want some, I don't know, wheat, or you want a bread, or you want some clothes or something like that, something similar, and then you have to exchange. Then, as we were speaking about money, when we introduced money, so we introduced also a price, so denomination of the value of the things that we are trying to sell. And you know how it goes. I believe that you are familiar with bazaars, so the concentrated places where all the trading is happening. There are a lot of people that are trading different kinds of stuff. And basically the price is set how? Based on the, as we have spoken this before, based on the supply and demand. So, in order to get a high price for something, you must have a low supply and a high demand. So if there is, I don't know, 2 Lamborghinis in the world and 10,000 people want those Lamborghinis, obviously those Lamborghinis will cost millions and millions of dollars. But if you have, let's imagine, 5 million of Lamborghinis, and we have only one person that wants to buy a Lamborghini, then basically those Lamborghinis are worthless. They're worthless because there are so much of them and many people that are wanting to sell their Lamborghinis, that at the end of the day, some of those 5 million traders that has a Lamborghini to sell will lower the price to, I don't know, to almost zero, to a $1, just to get rid of the Lamborghinis, because $1 is more than zero. Simple as that. So that's why you have to understand the supply and demand. And if you want to trade with something that will increase in value, because you want to invest in something, by investing you have to trade. You have to put money somewhere in order to buy something that will gain value over time. what do you have to look for? You have to look for the things that have high demand, high as possible, and supply lower as possible. That's why maybe Bitcoin that has only 21 millions of Bitcoin has a low supply and a very high demand. Maybe some arts like Picasso or something like that, it's very low supply, 1, 2 or 3 pictures, not more, and very high demand. That's why you have to go with those kinds of things when you're trying to do investments. So we have said that the price is determined based on the supply and demand. It means the price is defined by the amount of people that are trying to sell you something and the amount of people that are trying to buy that thing. Simple as that. And you can imagine, probably you were in these situations where you were the buyer. Most of the cases you were the buyer, far more than you were the seller. And you know what's the deal. When you want to buy something, then you go and you want to have a bargain, then you want to lower the price, then you say someone is selling you, I don't know, a piece of jewelry. Let's say a piece of jewelry, and they say it's 10 bucks or it's $100. Of course, then you will say, okay, can it be any cheaper? Can I get it for 80 or something like that, $80? And then the seller will say, they already know that you want a bargain. Then they will say, no, it's not possible. You cannot get it for 80. But okay, the lowest I can go is $95. I don't go any further. Then you will say, okay, I will give you $90 and that's it. Or I walk away. And then they say, okay. And basically this. So I believe this process of lowering and highering the price and meeting in the middle is something that's very familiar with you when you go to the bazaars, such things, not to the grocery stores. It's very interesting when you go to the grocery store, then you don't ask for a bargain. It's interesting. Then you swipe your card, just pay the full price and go. So it's interesting. Basically, they're also selling goods. Why should you pay for the full price if you can negotiate a lower price? Doesn't make any sense, but nevertheless, I believe it has to do something with the way that we are taught over the years, and we are mimicking and impersonating other people. That we are copying what they are doing. If everybody is swiping their cards, I should also swipe my card and pay the full price. So this process is known to everyone. You have a high price, you have a lower price, and then you are trying to get as low as possible. The seller is trying to get as high as possible, and then you meet somewhere. The price where you meet, it's called the market price. Market price. And that is what it's all about. When you are, on the other hand, when you are on the other side, when you are trying to sell something, let's say you're selling your vintage collection of some kind of recordings or books, or I don't know, an old bike, something like that. So you have an old bike, okay? And then you want to sell this bike to someone. What will you say? Okay, then you will go around and go to the internet and see what are the prices of these bikes, what are they going for, and then you will see that similar bikes are going, I don't know, around $200, and then you will put, it depends. If you have enough time to wait to sell this bike, maybe you will put 250. Maybe it's well preserved, it's in much better condition than other bikes that are listed online. But maybe if you're in a hurry and you want to get cash quickly, maybe you will put it, I don't know, 180, just to be below everyone else, because everyone else is selling for 200. And just to be slightly below this market price in order to sell and flip this bike as quickly as possible to get cash as quickly as possible. So you can see there is not such a thing as a price. So there is not a price that's hard-coded and carved in stone, and when I say, okay, this is a bike or this is a washing machine, okay, this is a washing machine, and I say washing machines are worth $500. That's their price. No, that is not their price. The seller is asking, so it's an ask price. He's asking for $500. It doesn't mean that he will get it. He will get it. You know what's the price of the washing machine or anything else in the world, the car, the house, the apartments, it doesn't matter what. The price is the price that someone is willing to pay. That's the real price. If there is no one to buy it for 500, guess what the shop will do? It will make something up, like it's a Christmas season or something like that. There is a discount, so it's now $430. You believe that that's not the case. They're not lowering the price because it's Christmas season.
What? Bro, what are you talking about, man?
They're lowering the price because it's sitting around their shop for far too long and I want to get rid of it, and then nobody wants to pay $500. Simple as that. That's why they're starting to lower the price until they get some people who are willing to pay. And they will continue to lower down until someone buys it. And people who are not in such a rush to buy washing machines, they understand that, and they know that at the end of the day, they will maybe come down to $350, and that's the price they're willing to pay. Because you can also state out loud that you're willing to pay only $350 for this washing machine. And if you have the time and the nerves to wait for the price to go to this level, then maybe you will buy your washing machine for this price. And then when you buy it, it will be the market price. So you understand, guys, when you are on the other end where you're trying to sell this bike, let's say, what's the price of this bike? The price of this bike is the price at which someone will buy it. So if someone comes and say, okay, I will give you 170, maybe you will say no. But if they give you 177, maybe you will say no. But you should know that maybe that's the only customer that you will have ever, or you will have to wait for another customer for, I don't know, 1 week, 2 weeks, 1 month. Maybe it's good, maybe you have the time, but you will see how many customers you have, because if you have a lot of fluctuation of customers, you have 5, 6, 7 people calling you each day to get this bike, then maybe you will not sell it for 170 because you're thinking yourself, okay, somebody will come and it will pay the full price, the listed price of $180. But if one person calls you in a month, then maybe you will go also with 170 if they give you only $170 for this bike. So that's the markets. The markets are the environments where all of this trading operation is going on. When someone is coming with something, with some good, with some commodity, it can be anything. So you can trade with anything: gas, liquids, oil, bitcoins, stocks, it doesn't matter. If you're trying to sell a stock, then it's a stock exchange. If you're trying to sell crypto, then it's a crypto exchange, and so on and so forth. But those are the places, like New York Stock Exchange, where you can buy or sell your stocks from the companies that are listed on that particular exchange. Also goes for crypto and so on. So this is what markets are, what trading is all about. So it's basically someone coming into this environment, putting something to sell, naming a price, and just looking whether or not he will continue to ask for this price, or he will go down, he will lower the price, or maybe the people will say, oh, it's the only washing machine left in the world, so maybe $500 is a bargain. Maybe I should get it while I still have the opportunity to buy. Then maybe if it's the last washing machine on earth, maybe someone will come and say, some with a large amount of money, will say, okay, I will give you $700 if you give it to me, because I want the washing machine and the other peasant doesn't have enough money to buy it for 700. They don't have the money to buy it at 500. So that's why it's important to monitor this price, to see the fluctuation of price going up and down, to know what is the supply and demand of the things that you are trying to buy or trying to sell. And that's what it's all about. And when you are trying to visualize this price, then you have a graph. I believe that you all have seen those kind of graphs. So on the graph of the price, so this is a price graph. You have a price here, okay, and you have a time. So it's monitoring the movement and the fluctuation of the price in time. So let's say, I don't know, it's Bitcoin. I don't know why. Bitcoin today is 100K, $100,000, but it started here, somewhere in, I don't know, 2008, and now it's 2025. And you know how it went, so it went something like that. It doesn't matter. So it is the fluctuation of the price. So you can see when the price went up, when the price went down, and so on. If you want to check this kind of activities on this kind of graphs, maybe the best place to look, it's what I'm using personally. It's called TradingView. So when you go here, you can see here, I have selected one particular stock. And what can you see here? Here on the top, you have possibility to search for different kinds of stocks, commodities, it doesn't matter. So you can search for oil, you can search, so you can see, so there is, you can search for, let's say, for gold, in terms of how many dollars you can get for an ounce or something like that. You can search for Bitcoin. You can search for Apple stock. So this is Apple stock. So when you select this, you will get a graph like this. I suppose that most of you have seen this kind of graph somewhere, maybe in the movies or something like that. And you can see that this graph is having red and green, they're called candles. So these elements, I believe that you understand, and it's pretty much logical, that the green ones are showing the increase of the price, while the red ones are showing the decrease of the price. So you can see here how the price went. Here on the bottom you have the time. So the time frame is 45 minutes. You can see here 45 minutes per each candlestick. So this is a candle, and each candle represents a time frame of 45 minutes, and you can change the resolution, the time resolution, and you can go, let's say, with 1 day. And you can see here on the bottom, so here is the December of 2024, here is the May of 2024. If you zoom out, you can see how the price was going from the beginning when this TradingView application started to monitor this stock. And you can see here when was the peaks, the local peaks of the prices is is it currently the price at its maximum or not? So you can see here that currently, based on this graph, the price is as high as it gets, so it is the maximum price ever. But if you move to a, let's say, shorter time frame, let's say to 45 minutes, or even more, let's say to 2 minutes, or 3 minutes, it doesn't matter. What you will see here, you now see that the price is maybe not at its maximum. Maybe this was the price when it was at its maximum, but you don't so you get a different kinds of information based on the time resolution that you are looking at. So when we are looking at the scale of 3 minutes, you can see that the price is, let's say, something in between. So here was the highest price, here was the lowest price, and here you have something in between. So this is on the right hand side, you have the current price is $248 currently, and currently there is a red candle forming. So that means that currently in the last 3 minutes the price went down. But it's a one conclusion when you're looking at the price at the 3 minutes chart. But when you zoom out, you can see here that the price was even higher. It was at the 11th of December this year, the price was much higher than here. So it depends on which scale you want to trade. If you want to trade on a daily or on a minute scale, that's something, let's say, a day traders are doing, then you should be looking at those kinds of fluctuations that are occurring on a minute or an hour scale, and you don't care about how the price is going up or down on 1 week scale or a yearly scale and so on. If you're looking, let's say, at S&P 500, so if you're looking at this graph, what can you conclude? You can conclude that currently here at the top, here was the maximum of the price, so it was 6,000. Okay, but if you go here, you will see that the current price is here was 6,092, currently is 6,051, and I will say the price is low. It's maybe low if we are looking at the price on a 3 minute scale, but if you zoom out and look, let's say, on a daily scale, so I'll put 1 day as a time frame and double click here, now you have the current fluctuation of the S&P 500 price from, let's say, here is the June of this year till December. And when you look at this chart and zoom out, you can come to a conclusion that the price is very, very high. So it's very high. So let's go even more. Let's go into a yearly chart. I will just remove all the drawings. What you can now see is that each of these candles, the green candles and the red candles, they are representing an entire year. And you can see here how the price went from 1871 till today. The price only during, I believe this is 2001, 2002. So it's the beginning of 2000 that the price went down. Also, the price went down in 2008. It was I believe you all know it was a big crisis, especially in all worlds. There was a big recession. The real estate market has gone down the toilet. And you can see it here, how the prices went down. So these are the recession periods. And then you have this upward movement of the price from 2008, almost parabolical, almost exponential move of the price. What's the problem? The problem here is that the price only went up and up and up all the time. The price went up, and the price can only go up as much as there are people that are willing to pay for that kind of exclusive high price. If you have even more people that are willing to buy at those high prices, the prices will go even more higher. But if there are no one left, so no one wants to buy it, the price will start to go down. And that's why you have this kind of bubble effects and so on. So the price is, let's say, like a bubble. It inflates, but if you don't have any kind of support, it will burst. The bubble will burst, and then we will have a downward spiral of the price, because there is no one else to buy, and people will start panically to sell, at least the ones that have in their possession this kind of stock or something similar. Also, what you need to know is that all of the goods and prices on these graphs, they are shown in, let's say, in dollars. So you have like this, Bitcoins versus, let's say, dollars. What does this mean? It means that you are tracking the price of the Bitcoin in dollars. And the price can go up in two ways. The price can go up if there is enough people. Let's say we are here, then we went down, and then now we are here at, I don't know, let's say it's $20,000, and around $20,000 there is a lot of people that are willing to buy Bitcoin. And then if there are a lot of people and they are buying, the buy pressure is high, they will move little by little, they will start to move price up, because there is only few of people that can buy at $20. Then the price will go up, because the sellers will obviously see that there are a lot of people that are willing to buy. Then they will start to increase their price, because the supply of the Bitcoin is, let's say, at this moment fixed. There is no more Bitcoin. Then the price will go up and up and up, and people will start to pay more and more for this kind of an asset and good and commodity, whatever, until there is no more people that are willing to buy at this price. So this is, let's say, 100K. So there is no one else left to buy it at around 100 or above. And there are a lot of people that are trying to sell their Bitcoins, and then the push of the price is going in this direction. So this is one way that you can, let's say, you can influence the price and how it goes up and down. So this is the normal standard markets. You have a supply and you have a demand. But you have another effect here, because it's measured in dollars. When we were talking about money, I said that the government can go to the bank and they can ask the Federal Reserve Bank to ask additional loan. As we said, dollars or money, they're practically debt. They're loans with some kind of interest. And when the government gets this loan, gets millions of new money, new dollars, then all of a sudden you have much more money fluctuating in the economy system. That means this money dilutes over different asset classes, including Bitcoin. What it means that for now, let's say I have one Bitcoin, and his worth is, I don't know, $10,000. But if someone now prints a new $2 billion here, prints on a printer machine, these $2 million, they get distributed all around the economy in different kinds of industries and so on. But one part of this will end up here. So you just put additional money into existing assets. So no one asked for more Bitcoin, no one wants to sell additional Bitcoins. It's just that the value of the money itself decreased because the money is also something that you trade with as Bitcoin. So if there is a lot of supply of the money, the price, denomination, the value, the buying power of this money, it goes down. But if it goes down, it means that tomorrow you will need more of this money, this paper money, fiat currency money, to buy the same Bitcoin. Let's assume that there is no increase of supply or demand of the Bitcoin itself. Just there is new money in the system. It dilutes all of the asset classes. It means that you will have to put or give even more money for the same amount of, let's say, in this case, Bitcoin. That means that the price of the Bitcoin will not be 10,000, it will be 12,000. So overnight, the price of the Bitcoin went up from, let's say, here to here, so from 10 to 12, but there is no additional effect in the markets. So there is no additional Bitcoins, or there is no more buyers or sellers. There is no increase of buying or selling pressure in the markets. It's just that the value of the money decreases. That's why you have to pay attention when you are looking on the charts. What is the supply demand of the asset that you are trying to buy or sell, and in which, let's say, currency it's valued. So in this case, it's in dollars. And guys, if you want to learn more about certain topics that we are covering in this podcast, like how to do affiliate marketing, how to do trading, crypto, forex, finance, general finance, and you want to learn more about how to escape the ordinary, how to escape this matrix pit and know the information that I am personally learning, then you have a possibility to enroll and to find out more in this game changer application. So the application is also available through the link that is available on my personal page. So you have a link here in the descriptions that you can go and check by yourself.